You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 28th day of November 2022. Hope you had a great Thanksgiving holiday weekend. Hope you're able to spend some quality time with your friends, your family, those who matter the most in your life, and hope you had some quiet time to realize just how much we all have to be thankful for. So, thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room, which is open from 9:30 a.m. to 11:30 a.m. Eastern. Now, that broadcast is reserved for members only and those who are currently taking their 1-week free trial. If you've never taken your 1-week free trial, in a few minutes, Michael will show you exactly how to do it. No credit card required. The purpose of the trial is to make sure that you have 5 consecutive trading days to use every tool and every resource that we offer, so that at the end of your trial, you can make a well-informed, intelligent decision whether or not what we do is right for you. So the training room ends at 11:30 a.m. Eastern. We take a 30-minute break, and then we come back at 12 noon Eastern for our afternoon broadcast, which is different than the morning broadcast. The afternoon broadcast is open to the public, and it's when we recap everything that's happened in the past 24 hours. Now, since today's Monday, the markets haven't quite been open 24 hours. They opened last night at 6 p.m. Eastern. That's the beginning of the Monday session. The Monday session will continue until 5 p.m. Eastern today. Then there will be a 1-hour break. And then tonight at 6 p.m. Eastern, that will begin the Tuesday session, even though it's still Monday night here in the U.S. Now, the afternoon broadcast, as I say, is open to the public, and there's 2 ways to join the afternoon broadcast, one a little better than the other. Let me give you the better way first. Go to mytradingiq.com. You only have to do this once. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and then every trading day going forward, you'll get an email before the afternoon broadcast starts. Even if you're not a member or on a free trial, you'll get an email, and in the email there'll be a link. All you have to do is click the link, and it automatically logs you into our platform. And the reason I call it the better way is because it gives you access to the question box so that you can ask questions and participate in the discussion. Now, of course, there'll be days you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. All you need is an internet-connected device anywhere on planet Earth. It could be a phone, a tablet, a PC, a Mac. Just point the browser to our YouTube channel, youtube.com/CFRN. easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily live broadcast. Currently, there are over 2,100 daily broadcasts archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, there's probably no better way to get to know who we really are, what we do, how we do it, and even why we do it. So, on the YouTube channel, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick a day at random, okay? Of course, I don't expect you to listen to each and every daily broadcast. That would take a very long time. But just pick days at random and watch Michael do the recap of the live training room. And then when he's done, you'll see me do the recap of the Logic 247 alerts and the Concierge Trade alerts. And what I'm hoping you'll find, if you'll invest the time, is the thread of continuity that flows through each and every daily broadcast. Because since we began broadcasting and archiving those broadcasts, the underlying principles upon which our strategy operates and our indicators operate, they haven't changed. They'll never change because they're built on the underlying principles upon which all markets work. Now, you might not have even known that there was a principle upon which all markets work, but there is, and I'll talk about that a little more later in the broadcast. For now, we're going to do what we always do at this time each day. We're going to open up with a word of prayer. Now, last week we spent the week talking about waiting on God. This week we're going to talk about the enemy's battleground. And the enemy's battleground is your mind. That's right. Our scripture today, Philippians 4, 8 through 9, from the Message translation. Summing it all up, friends, I'd say you'll do best by filling your minds and meditating on things that are true, noble, reputable, authentic, compelling, gracious. The best, not the worst. The beautiful, not the ugly. Things to praise, not things to curse. Put into practice what you learned from me, what you heard and saw and realized. Do that, and God, who makes everything work together, will work you into his most excellent harmonies. Now, that's Paul writing to the church at Philippi. And you'll find it again in Philippians 4, 8 through 9. Our lives are always moving in the direction of our strongest thoughts. What we think shapes who we are. You might read that and think I'm being an overly dramatic fellow, using hyperbole to get your attention. But this is no exaggeration. This is how life works. What you focus on the most is what you're going to attract into your life. You may have a stack of bills on your desk. If that's where you put your focus, if that's where you put your energy, if that's where you put your thoughts, if that's the beast you feed, that's the one that's going to grow. Instead, Focus on the solution, not the problem. Our lives follow the direction of our thoughts. The better we grasp that truth, the better equipped we'll be to change the trajectory of our lives. But don't take my word for it. Both the Bible and modern science provide evidence that this is true. So, over the next week, we'll unpack both Scripture and what we've learned from scientific research. And here's a brief example of both. In Philippians 4:8 through 9, we already covered that. In the 3 sentences, Paul moves from thought, think about such things, to action, put it into practice, to experience. The God of peace will be with you. Paul tells us that our thoughts shape our lives. In recent years, an entire discipline of modern psychology has developed something called cognitive behavioral therapy. This breakthrough teaching reveals that many problems, from eating disorders to relational challenges, addictions, and even some forms of depression and anxiety, are rooted in faulty and negative patterns of thinking. Treating those problems begins with changing our thinking. I don't know about you, but when the Bible and modern psychology say the same thing, I want to know more. What science is demonstrating today is what God told us through Solomon almost 3,000 years ago. In Proverbs 23:7, it says, "For as he thinks in his heart, so is he." So if both the Bible and modern science teach us that our lives are moving in the direction of our strongest thoughts, then we need to ask ourselves, do I like the direction my thoughts are taking me? If your answer is no, then maybe it's time to change your thinking. Maybe it's time to decide to change your mind so God can change your life. If you're skeptical, that's okay. Believe me, I get it. We've all tried unsuccessfully to change bad habits and force our runaway trains of thought back onto the right tracks. But this time, you're not alone. You're about to discover that God will team up with you to transform your thinking. With God's help, you can transform your mind. You can stop believing the lies that hold you back. You can end the vicious cycle of thoughts that are destructive to you and others. You can allow God to renew your mind by saturating you with his unchanging truth. Join me in a word of prayer. Heavenly Father, you are our fortress. And for everyone that's tuned into this broadcast today, God, there's a war in our minds right now. Your word tells us to surrender everything to you in prayer. And then you will give us your peace. This precious promise is why we cry out to you now. Our mind is a battleground right now, and we need your protection. Guard our hearts and minds through Christ Jesus, and make our minds your stronghold. Lead us out of the battle into your safety. In Jesus' name we pray. Amen.
Amen.
Everybody said amen. Let me give you the numbers from around the world real quick here, guys, and then Michael will give us a recap of what happened this morning in the live training room. Title of today's broadcast, if you're tuning in via YouTube, is Was the Holiday Rally a Bull Trap? We'll talk more about that as we move through the broadcast. Currently, in the U.S., the Dow is down 305 points. NASDAQ is down 108. S&P 500 down 41. The Russell 2000 down 19. Each one of those is roughly a 1% drop. In the commodity basket, crude oil is up 60 cents, trading 76.88 last. Gold is down $10.80, trading 17.4320 last. Silver down 44 cents, trading 20.98 last. Now for silver, that's a drop of a little over 2%, almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei fell 120 points, the Shanghai dropped 23, the Hang Seng fell 275 points, which is a little over 1.5%. And in the European markets at the close, FTSE down 12, DAX down 158, which is over 1%, and the CAC down 47. So that gives us a red day in Asia. It was a red day for the UK. And currently, it's a big red Radio Monday here in the US of A. So with that, we'll go to Michael and get a recap of everything that happened in the live training room this morning. Then I'll come back, we'll look at the logic alerts for the week, the concierge trade alerts from last night. And at any point during the broadcast, if you have a question, all you have to do is type it in the question box, and we'll be happy to answer it for you. Michael, I can see your screens.
Right. All right, here we go. Good afternoon, everyone. Today is Monday, the 28th day of November, 2022. Now, let's see. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. And right here, you just sign up right here. You can click on that. Or any one of these, register for the webinar, You can go all the way down to the bottom. There's another one. You can sign up for any one of those. Once you do that, you're going to be sent to this page right here. Fill out this form, and then you'll be sent all the information you need to get into the room in the morning. Okay. Once you're in the room, you should go back here. Well, before you get into the room, you should go back here and download the trading platform, whichever one you use that we have our indicators on. You should download that. If you don't have one yet, use DT Pro. That's what I use in the room. All right, you get an absolutely free trial for that. Real-time data and everything with that one. All right, you should go to the trade rules PDF. Take a look at that. These are the rules that we follow in the room in the morning. These are every trade that I take follows these rules. Right, the simple set of rules. Every single trade that I take follows those rules. If it doesn't, I made a mistake. And you can watch videos of me actually putting those rules into action. Okay, you should do all that stuff if you can take the free trial with us. Now, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. All right, we have just a couple days left in the spreadsheet for the month, and we'll be all done with the month of November. I was really hoping to have a better month, but the last few days, we haven't had a day over 1,000 since the elections, pretty much. Well, just a little after the election, leading up to the election on the 8th, and after the election for a few days, and then it's been kind of, I mean, good days, good enough days, but it's getting the average down now. Even the yearly average is down to $1,001. It is what it is. Anyway, if you're going to read the spreadsheet, you got to read all safety secrets disclosures down at the bottom. Today's the 28th day of November, 2022. Made 16 ticks in crude, 11 ticks in gold, and 17 ticks on the ES. Put us at 42.5 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 20 trades this morning. So on the month now, that's going to put us at $16,437. It's over 18 trading days, averaging $913 per contract per 2-hour trading day. On the year, that now puts us at 224,000. 224,000. Well, we are at that number, I think. But 224 days, we've got our goal for the day. 224 out of 224 days, we've got our goal for the day. And we got 285 days since our last negative day. And how did I know we were at 224,000? Because we're averaging $1,001 per contract per 2-hour trading day. So we're at $224,266. That is over 224 days, averaging $1,001 per contract per 2-hour business, 2-hour trading day. If you were to add 1 contract per month and quit trading when you got your goal for the day, that's really where you should be. Right now, you would only have worked 37.38 hours on the year, and you would have averaged $4,821. $4,821. So how many minutes did we add so far this month? For the month of November so far, we've added 4 hours so far. So 4 hours, we would have made $16,437. So that comes out to about 4,000, right? Not too bad. Now that's with 1 contract. With 11 contracts, 4 hours, and yeah, well, you can see. Anyway, that is it for all of that. I've gone over how to take the free trial and all that already, so I'm just going to go into here and go over the trades we did. All right, we'll start out with gold, and let me scroll down here. All right, so our first trade on gold was right in here. It was a trend line trade. We ended up with a break even. Take a look and see who is in here right now. Okay, our first trade in here was a break even. Our second trade was red off a red, blue off a blue, sorry, and that was a break even. It did end up going up, but I was out of it at break even by the time it actually moved up. Our moment in time said it was going to get choppy in here. We did have 2 blue off of blues that were both successful trades, but it still didn't really break out of the chop very much. It got up to this level here and then failed off of that all the way down through that level that we had seen. We did pick up something on this. I think we picked up well, somewhere in there, I got 1 tick. I think I got 1 tick on that one. And then I got 10 ticks there to get us plus, I got 20 ticks here to get us to 21. Right, and then I stopped out on the very next trade. That next trade, I should have had my stop at break even. So I stopped out. That was my fault. And I ended up with plus 11 on the gold. This was getting into the end of the session, and we really didn't have anything right at the end, and really nothing since. All right, that was gold. Now we're probably going to roll gold tonight. Dwayne, reminder, probably going to roll gold tonight into the next contract. All right, which would be G, February gold. All right, the next thing we did in here on crude oil, our very first trade on crude was right here. Looks like we got 1 tick on that. No, we've got a break even on that, a break even on the next one, and a plus 1 tick on the one after that. All 3 of them were trend line trades. Next trend line trade we took was right in here. We got minus 10 on that, so we're at minus 9 at that point. Then here it looks like this was our moment in time. I thought it was going to pull back, go up to this level, pull back again, and go up to that level. Somewhere in there, I thought it was going to pull back 1 more time. Right in here is where it pulled back 1 more time, but it did eventually get up to that level. Then after the moment of time, we had a blue off a blue right here. Now we had gone from plus 1 to minus 9 to minus 8 to plus 4. So right there, I picked up 12 ticks. So I had a plus 1, then a break even, then a plus 12, then a plus plus 2 to get me to 6, and then over here, no, I didn't write one of those down. And from minus 8 plus 12 to get me to 4, then plus 2 to get me to 6, then plus 10 right there to get me to 16. Then, oh, these are both break evens here. Yeah, that's what I did. Those are both break evens. That's why I didn't write anything down. Then 2 break even trades right in there. And that was where we ended it for the morning session at plus 16. During the break, there's a big move up, but the only trade in that move up would have been from right here to right there. Okay, as far as red off of red and blue off of blue go, there was one blue off of blue right here. And one blue off of blue right here. And that was it. There were some trend line trades in that leg up right there, but just those couple of blue off of blues. Both of them would have worked out okay. All right, that was crude oil today. We ended with plus 16 ticks. Now the ES. Let's see here on the ES. Scroll this all the way back to the beginning. This is where we got our goal for the day. On the very first trade, we got 8 ticks profit. We had a break even. Break even and a plus 4 to get us to 12. Then another break even. And then a break even and a plus 1 to get us 13. And a break even. Oh, I'm sorry, this was a plus 4. This was a plus 1 to get us to 13. This was a plus 4 to get us to 17. Right, and that was a break even. This was our moment in time. This in here, I was looking at the woo spot right here. We never got into it. If we did get into it, it happened over here finally during the moment in time. And I was thinking when it got down to this level, it would probably pull back a little bit. It did. And then finish down to this level, which it did. Our moment in time, I was thinking it was just going to be choppy in here, and it was. And we really didn't get anything during the moment in time. All right. During the break, we had one blue off of blue right there during the break. And that was it. Okay, so with the ES, we ended up with plus 17 on the morning session. All right. Okay, let's go back here. Now, if you are going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 28th day of November, 2022. 16 ticks on crude, 11 ticks on gold, 17 ticks on the ES. Put us at 482.5 on the morning session. Today it took 4 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 20 trades this morning. So on the month now, we're at $16,437. It's over 18 trading days, averaging $913 per contract per 2-hour business day. I've got my goal on 224 out of 224 days this year. And I've gone 285 consecutive business days getting my goal. On the year, that puts us at $224,266, averaging $1,001 per contract per 2-hour business day on the whole year. Right? We've never gone this far, averaging this much money per day on the year. If you were to quit trading when you get your goal for the day and you were to add 1 contract a month, so far you would only have to work 37.38 hours so far this year, averaging $4,821 per hour on the year. Okay. All right. Now to take the free trial, if you've not done it, go to the home page here at mytradingiq.com. You can sign up right here. Sign up for your free 5-day trial. You can sign up there. You can sign up here. There's a bunch of places to sign up for the trial on the page. Any one of those is going to bring you to this page. This page? No, this page. Just fill out this information, and then you'll be sent the link you need to get into the room in the morning, along with the password that you need to get into the room in the morning. Okay? All right. That's it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am. Let me grab the screen.
Okay.
Are you feeling any better?
Not really.
No.
It's this time of the day it gets a little bit better than the morning and at night, but it's still pretty nasty.
Are you on any kind of medication at all for it?
Well, just over the counter stuff, just stuff you can buy at the grocery store too, at the drugstore.
Right. Okay. Well, way to hang in there, man. You've always been a real trooper, you. You know,
It'll be
years
all right.
ago, I figured I can lay in bed and feel horrible, or I can go try and do something productive, and that will at least temporarily take my mind off how horrible I feel. So
Yeah.
I've tried to do that as much as I can throughout my life, but sometimes you just get so bad, you know, you just can't.
Yeah, you don't
So,
want to get out of bed.
right.
It's all
So,
good.
recap of the recap.
Today, 4 minutes, one trade, $100 a contract.
Awesome.
Go.
Smoking hot. Okay. All right, guys. Logic 247. Now, this recap was published 5:45 a.m. this morning. Valerie's out of the office on business right now. So, when she returns to the office this afternoon, she will do a fresh recap because there have been alerts that were issued last night that have since triggered, and there's new alerts from today that have triggered. So, she'll provide an updated recap in the members only discussion group and also in the trial discussion group. So expect that this afternoon, probably around 6 p.m. Eastern. Now, as of 5:45 this morning, when this was posted Eastern, we had issued a total of 15 Logic 247 alerts. We're currently in week 226 of Logic 247. We have issued over 12,500 individual handcrafted alerts. Now, we don't just cover the E-minis with Logic 247, we also cover crude and gold and silver and euro and the bonds. Of the 15 alerts that had been issued at this time, we were still waiting on the outcome of 6, so we had 9 actionable alerts, of which so far nothing has been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our passport holders. Now, with an alert, the maximum you risk is 300, but you also want to determine what the profit potential is in any given alert. And so the alerts, they have an entry, they have an initial target designed to help you get your goal for the day. And then they may have a second, a third, a fourth target, and then there'll be a final trade to target, which on a long is the weekly zone above, and on a short is the weekly zone below. And so from the entry price to the final trade to target, that's the potential profit in the trade. But even if there's $1,000 of potential profit per contract traded, you still don't want to risk more than $300 per contract per trade. However, also if there is less than $300 potential profit, because the entry is very close to the zone, then whatever the maximum profit is, let's say there's only $100 maximum profit potential in the trade, well then you can only risk $100. It's that simple, okay? So you look at the entry price, you look at the final trade to target, whether it's a long or a short, and that's what the potential profit in the trade is, okay? All right, make sure everybody understands that. Last week, let's take a peek at how last week went, because we did have a holiday, but we kind of worked through it. I still put out alerts Wednesday night and Thursday night, yeah, as I had promised you that I would. Okay, last week, which was week 225, we issued a total of 86 alerts. 16 never triggered. So there were 70 actionable alerts. of which 12 or 17% would have been stopped out based on that maximum risk profile that I just explained, and that we teach all of our passport holders in one-on-one mentoring sessions. Now, hallmark of a good week. This number here, we want it to be 20% or less. And that's what we've averaged over, well, now we're into week 226. But as of last week, we've averaged 20% or less getting stopped out based on that risk profile. And then this number here, we want that to be 1/3 or less than this number. So 10 times 3 is 30, and so it's less. So this is the hallmark of a good week. Okay. Could have been better, but we're happy with it. Absolutely happy. Now, the logic alerts are based on current price action, and they do come out around the clock. Futures trade around the clock, and we have traders around the world. Our day session is their night session, and vice versa. So that's one of the things we really like about futures, is because it helps those who are trying to, break into the world of trading, but they still have that day job to deal with, right? Now, if you work the night shift, okay, but if you work the day shift, it's still okay, because the markets trade around the clock. And you can always count on the S&P, crude, gold, and some of the other markets having plenty of volume. So you don't have to worry about, well, I can't trade at night because there's not enough volume. Once upon a time, that was true. Going back to like 2005, overnight volume in the futures markets was pretty light. It was almost like a non-event. Nothing important ever started or ended during what's called the Globex session, or the overnight session. That's no longer true. Now it's quite common for important moves to begin or end during the overnight session. Asia opens around 8 p.m. Eastern, and then London opens at 3 a.m. Eastern, and of course we all know that Wall Street opens at 9:30 a.m. Eastern. So we just kind of follow the sun around the world until it's the next day. 1 hour break each day. Now, as I said, the logic alerts are based on current price action. However, I build in time so that you're able to get the alert, study the alert, and study your chart long before the trade actually triggers. Because the purpose of the alerts is not so that you can just trade them without having to learn how to trade. Although I know some people use them that way, and sadly there's going to come a day when they regret they did that, because right now they have an opportunity to learn how to trade. And that's the purpose, that's the true purpose of the alerts. They're a training and teaching tool, because we want you to get to the point where you no longer need anybody to tell you when to get in or when to get out. We want you to be able to look at the chart, and the chart will tell you when to get in and when to get out. Now, once you master that, we don't want you to take off. We want you to stick around, be a part of the community, and help the next new person that comes along who is trying to learn how to become a consistently profitable trader. Along with the Logic 247 alerts, our original alert service, the concierge trade alerts, they're different. Different how? Well, in a couple ways. Number one, they're based on historic price action. Now, when historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. The CTAs don't come out around the clock. They're issued as a static report shortly after the Globex Open each evening, Sunday through Thursday. So the market opened last night at 6 p.m. Eastern, as it does, and the CTAs were published at 6:15 p.m. Eastern. As you can see, there's two numbers for each market. Chances are you don't trade all the markets, and if you're new, you shouldn't try. Someone asked last night, is it okay if I just focus on the ES? Absolutely. In fact, we suggest that if you're brand new, you focus on one or at the most two markets until you learn the strategy and how to read the indicators, because we trade every market exactly the same. When I go from the ES to gold or crude or the Russell, I don't change my indicators in any way. I don't need to. If I want to go trade Apple or Google, if I want to trade the British pound or Bitcoin, I don't have to change my strategy. I don't have to change the settings on my indicators, because all markets, all futures markets, there's over 8,000 individual stocks out there. There's innumerable cryptos that you can trade, and there's a ton of forex pairs that you can trade. So in the beginning, you do focus on one market so that you can learn the strategy and learn how to read the indicators. And once you've mastered that, now you're free to go trade any market you want, because there'll be times, let's say that you just want to focus on the S&P in the beginning. No problem. In fact, we encourage it. But there'll come a time when you'll be staring at that S&P chart and it's just flatlining, and you're like, man, I wish it would give me a good trade setup. Well, the good news is you're not stuck with just the S&P. Once you've learned the strategy and how to read the indicators, you can jump over to crude or gold or silver, because somewhere in some market, there's always an opportunity setting up. How's this possible? Because price flows the same across all markets and all time frames. From futures to stocks to crypto to forex, from a 1-minute chart to a monthly chart, price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. And as you learn how to read the chart and read market structure, that in combination with our indicators, it will help you be on the right side of the street as opportunity presents itself. And we're going to go over the individual charts of each of these markets. As we do every day, we'll start with a daily chart. But first, let me explain to you how to use this, okay? Whatever market you trade, make note of where price is at the time the report is published. It will be somewhere between these two numbers, okay? Now, from that moment forward, if price starts trending up towards 40.51, that means price has gotten above the VBC. Then our strategy will look for opportunities to be long the market. If, on the other hand, price gets below the BBC and starts trending down towards 40.12, that's bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market based upon the information that the chart is giving you. And so for the markets that you trade, when this report gets published each evening, and even if you're on a trial, these numbers are published for you in the trial alert channel. So for the ES, you would draw a line in the sand at 40.51. You draw a line in the sand at 40.12. Okay. You first think of these numbers as a target. Okay. Most days, most cases, you'll have an opportunity to get your goal for the day as price makes its way down to the CTA number or up to the CTA number. So initially these numbers are targets. Once penetrated, they become entries. And once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Some days we'll see 2, 3, 4, 5, 6, 7, even more. There's been days when we'd see 10 triggers. Okay, just remember that once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So if you want to grab a screenshot of these, if you don't have access to these numbers, because this is open to the public, okay, go ahead and get your screenshot. And before we go to that daily chart, of course, I have 10 things you need to know today. China affirmed today its zero COVID policy, but eased tough restrictions in some areas as demonstrations against the rules continue to spread for a third straight day on Sunday. Hundreds of protesters clashed with police in Shanghai. Crowds, some calling for the president to resign, took to the streets in other cities following a deadly fire in the country's far west, with government critics saying coronavirus restrictions delayed the response. Two groups with a combined 1,000 or more protesters gathered in Beijing early Monday. "We don't want masks, we want freedom," one of the groups chanted. People also demonstrated in Wuhan and Chengdu on Sunday, and students gathered to demonstrate on numerous university campuses over the weekend. Now, we have a lot of protests here in America, okay? And sometimes they end ugly. Sometimes people's cars get set on fire, and people's businesses, their whole life gets set afire for no good reason, okay? But protesting here in America, police often just stand by and watch. But it takes gazoolies to protest in China. We all remember Tiananmen Square, okay? Could something like that happen in this day and time? I would say something like that is close to happening in this day and time. So, moving on. Dr. Anthony Fauci, the nation's, I'm doing this in air quotes, top infectious disease expert. Okay, We do know for a fact that he is the highest paid government employee in the U.S. That part's an actual fact. Said on Sunday, news shows that the nation is in a much better situation than last year, but the coronavirus pandemic is certainly not over. Huh. Just the other day, President Biden said it was. But Dr. Fauci's the expert. I think the idea that forget it, this is over, it isn't, said Fauci, a leader of the COVID-19 response under President Biden and former President Donald Trump. Fauci noted that 300 to 400 people are still dying every day from COVID-19. The White House last week launched a campaign to get more people to get the latest vaccine booster. Fauci's message seemed to contradict President Biden, who said in September that COVID was still a little problem, but the pandemic was over. Now we have current figures through August. And this is the first time this has happened, okay? The numbers have been steadily increasing all year, but the numbers just came out for August. It was the first time that more than 50% of the people who died from COVID were people who had been vaccinated and boosted. Some boosted multiple times. Over 50%. Now, if the numbers have been steadily increasing in that direction all year, when the numbers come out for September and October and November, you can only assume they're going to get worse. Iranian Major General Hossein Salami, the commander-in-chief of the Islamic Revolutionary Guard, warned people to stop anti-government protests in an eastern province in Iran, where the country's military has cracked down particularly hard following 2 months of unrest. We will definitely turn this huge sedition scene into a burial ground for the policies of America, Israel, and its allies. That's a threat. Salami went on to say, stopping short of repeating other Iranian officials, offers of amnesty, but saying that deceived people will return to the lap of the nation if they just stop demonstrating, stop complaining, shut up. At least 440 people have died in these clashes with security forces since the protests began, after Mahsa Emini, 22, died while in police custody. Republican lawmakers have largely remained silent after former President Donald Trump hosted Kanye West and Nick Fuentes, a Holocaust denier and white supremacist, for dinner at Mar-a-Lago last week. This is according to Axios. So, consider the source. Spokespeople for nearly 24 House and Senate Republicans didn't respond to Axios' request for comment. Some GOP lawmakers did speak out. Representative Bacon from Nebraska, co-chair of the bipartisan caucus for the advancement of Torah values, said he is appalled about the dinner party. Outgoing reps Liz Cheney from Wyoming and Adam Kinzinger from Illinois, frequent Trump critics, condemned the meeting and the silence of GOP leadership. Outgoing Arkansas Governor Asa Hutchinson told CNN Trump's empowering of an avowed anti-Semite and white supremacist is very troubling. Yeah, I'd like to know the truth behind all that, but we'll move on. Thomas James, one of the two men who disarmed the attacker in last week's mass shooting at an LGBTQ nightclub in Colorado Springs, issued his first public statement on the incident from a hospital where he is recovering from undisclosed injuries. James, who kicked away the suspect's semi-automatic rifle after another patron at the bar, Club Q, tackled him. James, a U.S. Navy Petty Officer Second Class, said in a statement, "I simply wanted to save the family I found. To the youth I say, be brave. Your family is out there. You are loved and valued. So when you come out of the closet, come out swinging." The shooting left 5 people dead and at least 19 injured. Iran on Sunday protested U.S. soccer's social media post showing an altered image of Iran's flag without the emblem of the Islamic Republic, as the U.S. and Iranian team prepared for a crucial Tuesday World Cup match that will determine whether the U.S. men's team advances or is eliminated. U.S. Soccer told CNN on Sunday that it changed the official Iranian flag image for 24 hours in support of the women in Iran fighting for basic human rights, always planning to put the original flag back up later. Iranian media called for the U.S. to be booted from the 2022 World Cup for posting a distorted image of the flag of the Islamic Republic of Iran on its official account, which Iranian media said violated the global soccer governing body's charter. These people barely have access to the internet, and what they do have access to is extremely censored. I'm surprised anyone over there even saw it. Airlines delayed more than 2,500 flights into or out of U.S. airports on Sunday as rain, high winds, and snow disrupted travel during the post-Thanksgiving rush. Dozens of flights were canceled, according to FlightAware.com. Nearly 55 million people were projected to have traveled 50 miles or more from home for the holiday, 98% of pre-pandemic levels, according to AAA. Parts of the Ohio Valley and the Southeast that are home to 14 million people were under wind advisories. Officials in Kentucky reported wind gusts as high as 53 miles per hour. Walt Disney Company's new movie, Strange World, brought in a disappointing $18.6 million in ticket sales over a long Thanksgiving holiday weekend that started on Wednesday. The latest release was the entertainment giant's second straight animated flop after this summer's Lightyear. Now, we talked about this last week. They're bringing back Bob Iger in hopes that he can save Disney. Disney did have a bigger bomb in March of 2021, Raya and the Last Dragon, but that was largely due to the thinning of movie theater audiences due to the pandemic. Before that, it had been more than 10 years since Disney's animated division had a theatrical opening as dismal as Strange World, according to the Wall Street Journal. The poor performance of 2 consecutive animated films shows that returning CEO Bob Iger faces a theatrical environment far harsher to animated releases than the one he left in 2020. Remember, he's coming out of retirement to try to save the company. Go Bob. Number 9, rescue crews used bucket trucks to extricate 2 people early Monday from a small plane that crashed into power lines near a Montgomery County, Maryland airport. County Fire Chief Scott Goldstein said the plane was secured to the tower shortly before passenger Jan Williams, 66, and pilot Patrick Merkel, 65, were removed from the single-engine Mooney M20J at about 12:30 a.m. Both men were rushed to hospitals with serious but non-life-threatening injuries. Hypothermia also was a concern. The crash occurred at about 5:40 p.m. Eastern on Sunday, but it took hours to ground the high-tension workers and secure the plane to the tower about 100 feet in the air so rescuers could work safely. The incident also cut power to thousands of people until after the rescue. And coming in at number 10, it's always a sad one. How many of you remember Fame and Flashdance? Academy Award-winning actor, songwriter, and singer Irene Cara, whose best-known hits included the title tracks of the 1980s hit movies Flashdance and Fame, died over the weekend at her Florida home. She was only 63. Cara became a star after being cast as Coco Hernandez in the 1980 musical Fame. She sang the title track, which earned her nominations for Best New Artist and Best Pop Vocal Performance at the 23rd Annual Grammy Awards in 1981. She then sang and co-wrote Flashdance, What a Feeling, for the 1983 blockbuster film Flashdance. The 80s were like that was the best decade of movies ever, in my humble opinion. The song Flashdance earned her 2 Grammys for Best Pop Vocal Performance, Female, and Best Album of Original Score for Motion Picture or a Television Special, and an Academy Award for the Best Original Song. And there you have it. 10 things you need to know today. All right, here we go. Daily chart of the S&P. Why do we start with the daily chart? We don't train you on the daily chart in the training room. The alerts aren't based on the daily chart. They're based on 30-minute charts. We look at the daily chart every day to see which way the institutional money is flowing, because it is the institutional money that moves price, not the actions of us retail traders. Okay? The hedge funds, the Goldman Sachs of the world, they're the ones that move price. And so whatever market you trade, might not be the S&P, it might be the Dow or the Russell, the NQ, gold, doesn't matter. Google, Facebook, whatever. Look at the daily chart for 2 minutes before you begin your trading session, okay? As you can see, we had a gap lower open last night that is still far from filling, and that's unusual because when there is a gap on the Emini futures, S&P, Dow, Russell, NQ, they almost always close within a few hours, or at least in the same trading session, but every now and then they don't. And this is a bold statement we're looking at here, okay? We're below the step line. Here's that 38% reverse fib. Remember 1, 2, 3, 4, 5, 6, 7 days it took, 7 trading days to break through that support, which then became resistance. And then as we got back above the BBC here, and we pulled back into that same important price, important area, We said this could be a range for a while. Support, 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 support. And now, dropping. That red candle. Looks like we're on the low of the day. And on the E-minis, S&P Dow, Russell, NQ. We'll get this out of the way so that you can see where the daily BBC is. Okay, so as price comes down to this 38% reverse fib, we expect it to be support because it has been in the past. But we've got the daily BBC, which just stands for bull bear cross. When price crosses above the green line, we anticipate higher prices. When price crosses below that green line, we anticipate lower prices, higher prices. Okay, it's real simple. That applies to every market, every time frame, from 1 minute to monthly. Okay, so what could possibly stop price from continuing to drop until it finds support in this area here? Well, we had a low on November 22nd at 39.45. Okay, that's the one little spot which is just barely above that 38% reverse fib, and the daily BBC is currently at 39.37. So no reason to be long. Okay. So now that you've spent a couple minutes looking at the daily chart of whatever market it is you trade, now you're ready to go to the smaller time frames. Okay. All alerts are based on the 30-minute chart. Now the zones that you see, the weekly trading zones that you see on my charts today are last week's weekly trading zones, because the alerts that I put out on Sunday night are based on the previous week's zones. The new zones are published Monday morning at 6:15 a.m. Eastern for our members and those taking the free trial. We have published the weekly zones since December 14th of 2009. That's well over a decade. Well over. And what's changed since the first time we publicly shared them with our members? Absolutely nothing. When price rallies up to a zone, what do we expect? Resistance. When price drops to a zone, what do we expect? Support. Resistance. Support. Until proven otherwise. Now, on tomorrow's afternoon broadcast, the new zones will be on my charts, because any alert that I put out today or may put out later today will, of course, be based on this week's zones that were published this morning at 6:15 a.m. Eastern. But this shows you the importance, the carryover power of the zones from one week to the next. Okay? These zones that you're looking at were published 6:15 a.m. Eastern, not this morning, Monday morning, but last week's Monday morning. Yeah. And here we are, over a week later, still doing their job. So, resistance. Well, first we had support. And resistance and support, and resistance and support. And that's how price flows. Notice we were climbing here. Price was above the BBC. Remember the green line, 30-minute. Okay? Lag and retrace and lag and retrace. We lag until price got below the BBC. Okay? Lag and a retracement. When price pulls up to the BBC, we expect resistance. When price drops to the BBC, we expect support. 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 Every market, every time frame. When price pulls back to the BBC from above, we expect support. And when it pulls up from below, we expect resistance. And yes, this candle did spike. And the second candle put us right back. And so that pullback held, okay? Because both of these candles are still physically touching the green line. Same thing here, here, right here. See how we spiked it just a wee bit? Okay. Now, the CTA numbers that I showed you just a few moments ago, now you're looking at them on a chart. 40.51, 40.12. Remember I said, you know, draw lines in the sand. You can make your line in the sand look any way you want, or you don't even have to draw a line if you don't want to. Just make sure you know where the numbers are. Okay? So the market closed here Friday, had a half day, and then last night this was the gap lower opening. And from the open, which was the open was 40.20, down to the zone at 40.17/40.18. That's your goal for the day. And then price continued to drop, okay, down to 40.12. And so from 40.20 to 40.12, that's 8 points. $50 a point, $400 per contract traded. As I said earlier, first think of it as a target, and then once penetrated, it becomes an entry. And once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So the first trigger at 40.12 actually took us to a low of 39.97. We'll call it 39.98. That's 14 points at $50 a point. And then price got back above the trigger. But not all triggers are created equal. Okay? You'll notice on this move down, we had red and falling. Okay? You've got price, the step line, red and falling, and then the BBC. That's the perfect scenario for lower prices. Until the step line crosses from the left side of red and falling to the right side of red and falling, that's an indication that price is going to attempt to pull back to the BBC. And did. But now on this trigger we have an issue. We've got blue and climbing, which represents support. Red and falling represents resistance and lower numbers. Blue and climbing represents support and higher prices. Now, this time, price triggered and it sliced through blue and climbing like it wasn't even there, and ran right to the zone, to the tick. So, just because you might have got away with it this time, okay, that's typically not how it's going to unfold. The smart thing to do would be to wait for price to close below blue and climbing, and then get short on the next candle with an expectation that you might find support here, and then here, where we did in fact find support. This one candle had a high of 40.07 and a low of 39.93. 14 points in that one candle right there. Okay, the market finds support. It's always going to turn around and go look for resistance, which it found at the zone and at the BBC. Once price closed back below the BBC and blue and climbing turned to red and falling, now you're able to short that thing down to the zone, pull back, short it again, and we trade it to the zone and through the zone. Now you'll learn over time how to stay in some of these moves if you're looking for more than just to get your daily goal for the day. This candle right here, really the only three things happen at a weekly zone. The most common is consolidation, 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 consolidation. That's about 70% of the time. The second most likely thing to happen, about 20% of the times, this, rejection. This was a huge green candle all the way to the zone, but by the time the 30-minute candle closed, price had dropped all the way back to here, meaning price got rejected. Okay. Third and least likely, but it happens, this candle. This isn't the perfect example because this is part of the consolidation, but it still makes the point. When price slices through a zone, this was a red candle all the way down, but before the 30-minute candle closed, it pulled back up to the zone it sliced through and then continued in the direction of the slice. That may sound like Greek if you're new, but you'll start to understand it pretty quickly. And once you understand the importance of the zones, how to use them as you're finding your trade setups. They can be targets, they can be support, they can be resistance. They will become one of the most important tools in your trading toolbox. You can't learn everything at once. And I know that's what everybody wants to do. They just want to know everything right now. That doesn't happen. That can happen. It's going to take time. Okay? You take a bite today, digest that. Take another bite tomorrow, digest that. Another bite the next day. Pretty soon, the clouds part and you have this aha moment, right? Okay. Now, once you have your aha moment, that doesn't mean you're never going to get stopped out again. The best professional, consistently profitable trader on the planet, whoever that is, gets stopped out. The difference between that person and a new retail trader is that the retail trader freaks out when they get stopped out. But the professional trader doesn't even blink an eye because they understand getting stopped out is as much a part of trading as breathing is a part of life. All right, we've covered the ES well. We'll go through the rest of these pretty quick. By the way, the vertical line on each of these charts separates today, Monday, Friday, like over here is Thursday, okay, Wednesday, etc., and so forth and so on. So we had a gap lower open on the Dow, got below the BBC, which means the opening of this candle, 34,298, it's a beautiful place to get short. You got red and falling, you're below the BBC, you got the step line, and then to the right of that you got red and falling. And so from the open of this candle, 34,298, from 298 down to the target at 245, we'll just call it 45 points at $5 a point. S&P pays 50 a point, Dow pays 5 a point. Okay? Target first, trigger second. So we hit the target, bounced, and then we triggered. And from 245, we dropped to 143. It's basically $500 per contract traded. Okay. Now look, just like on the ES, you see where the step line crossed from the left side of red and falling to the right side? That's the chart telling you that price is going to attempt to pull back to the BBC. And it did. And so we trigger again and we trigger again, but we've said and already talked about the fact that not all triggers are created equal. Okay? You'll learn more and more each day you're in the room and every time you book a one-on-one mentoring session. And as a lifetime member, with no recurring fees, you have lifetime access to the room and unlimited access to one-on-one mentoring sessions. New people should book a session a week, or two if they want. It's entirely up to you. Whatever your schedule permits, okay? You book it, we show up, we deal with whatever you need to understand right now that you don't understand for 45 minutes. Then you digest and put to use the things that we talk about, whether you meet with me or Michael or Valerie or Bert, whoever you choose to meet with. You have, as a member, you will have unlimited access to one-on-one sessions. You won't find that anywhere else. Period. You just won't. I know. Because I stay on top of stuff like that. So price comes down, pulls back to the BBC, finds resistance, continues down to the zone, pulls back up, and continues down. Now, why did the market stop here? I mean, we were falling real good. Look left, right here. That cluster came right down to that cluster and found support. See, there's no magic here. If you came looking for magic, for a magic show, a parlor trick, circus act, we're not your guy. If you want to learn how markets work, how price flows, and how to become a trader, then you have come to the right place. Many, many, many of your questions will be answered by simply looking left. Okay? Clear as day. Now, let's ask ourselves on this candle, and even this candle, why did this candle stop here? Why did this candle stop here? Well, the high of this candle, if you look at the horizontal line on my cursor, it's where the bearish cross took place. A bearish cross is when the red line moves below the green line. And at that apex right there, when you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always find resistance, at least the first time. And it did. Now on this one, remember we had a gap open last night? This was the high of the first 30-minute candle. Price almost got up to last night's open and failed. Just failed. Buyers were not committed last night, which is why we gapped lower. And as price approached that area, once again, buyers showed, institutional buyers showed, they weren't committed to the long side. Now, the lowest weekly trading zone this week for the Dow is 33,855. down here. When we get this close to the lowest or highest weekly zone by Tuesday morning, today's Monday, but I'm talking by Tuesday morning, then 9 out of 10 times what will end up happening is the market will reverse and head in the other direction for the rest of the week. Now, I can't guarantee you that's going to happen this week, but I'm just telling you what happens way more often than it doesn't, like 9 out of 10 times. Okay? And remember, we've been publishing the zones since December 14th of 2009, so we have a pretty good idea of how price reacts in and around the zones. So we can move on to the Russell. Same thing, gap lower open. Now, this candle opened at 1865.5, so we'll just call it 65. Down to the target at 1860, that's 5 points. At $50 a point, that's $250 per contract traded. If you're following the 2420 blueprint, you know you only need to make $100 a day in whatever market you choose to trade. In the S&P, that's 2 points. In the Dow, it's 20 points. In crude or gold, it's 10 ticks. Okay. So if you're following the 2420 blueprint, which is designed to get you from 1 to 20 contracts over a period of 24 months, you had your goal for the day well before we hit the target. Once we hit the target and pierced it, what happened? We dropped. Just like the S&P, just like the Dow. These charts are almost identical. We put in a low at 1853. That's 7 points, $50 a point, $350 per contract traded. Then we get back above the CTA, but we've got that same issue with blue and climbing. So we need to let price get below blue and climbing, okay? And then we can trade it down to the zone. Remember, when price drops to a zone, what do we expect? Support. And then price pokes back up again, but this time the BBC has dropped below the short trigger, so you got to wait for price to get back below the BBC, and then you got another golden opportunity, and then we pull back to the BBC again. Remember I said the pullback to the BBC holds more often than it doesn't. Like here, and here, and here, and here, and here, and here. And then when you get below it, it pulls up, pulls up, pulls up. It holds, it holds, it holds, it holds. Now, you look at this candle, you go, wait a minute, that was a huge green candle all the way up. Yeah. But by the time the 30-minute period was over, look where price was. Way down here. So when you sit down to trade, you look at a current 30-minute candle, let it do its work so that you know then what type of trade to be looking for on your smaller time frame execution chart. Michael uses a 7-tick in the room to execute. I personally use an 8-tick range chart, not a tick chart, but a range chart. The difference is a 7-tick range chart, every candle on the chart is exactly 7 ticks tall. On my trigger chart, every candle is exactly 8 ticks tall. Okay. Now, if you're used to time charts, like 1-minute charts and 5-minute charts and whatever, the chart's going to print a new candle every 1 minute, every 5 minutes, every 30 minutes, whatever time frame you're set on. No matter what price is done, it's going to dutifully print another candle. But with a range chart, time is taken out of the equation, it's based purely on price. And no matter what market you trade, no matter what time frame you trade, the clock on the wall is always price. Okay. So on the Russell, we dropped from 1860 to 1854, 6 points, $50 a point, $300 per contract traded. Back above, down again, back above, down again. Okay. And when your S&P daily chart looks like this, the other indices, they won't follow the S&P step for step, tick for tick. But by the end of the day, end of the session, most days, 9 out of 10, they will have moved in a very similar pattern. I mean, on the ES, look at what happened. See the crossover, step line crosses over, pulls up and down, yeah. Dow, boom, 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 boom. Russell, gap down, boom, 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 boom. And now the NQ, the final of the indices. Okay. Now understand something. The indices are this is a man-made creation. Okay. When you're trading crude and gold, God made those. Now, man figured out a way to trade them with the use of futures contracts and other ways. Okay. But the indices, God didn't make the S&P 500 or the Dow or the Russell or the NQ. He made man who created those things. The S&P 500, just as the example, is 500 large cap companies. It's always going to go higher over time. Now, we've been in a downtrend most of this year, but that doesn't change the fact that over time it's going to go higher. Why? Because the board over its Standard & Poor's, they determine, based on a lengthy list of qualifications, what 500 companies are allowed to be in the S&P 500 index. And when one of those companies gets sick, misses their numbers a few times, goes bankrupt or whatever, they will be kicked out of the S&P 500 group, and a new, strong, bullish company that's exceeding their numbers will be brought in to replace them. That's also true of the Dow 30, the NQ 100, and the Russell 2000. That's 2,000 small cap companies. They're constantly rotating companies in and out so that over time they always go higher. If you have someone in your life, a grandson, or even a son, whatever, and they're in, let's say, their early 20s, this means they have a long time horizon till they have to, start thinking about retirement. If all they did was buy an S&P index fund, and there's different companies have different, just buy an S&P 500 index fund, and based on what they make, put in $20 every week, or put in $100 every week. If they're in their 20s now, by the time they reach their 60s, they're not going to have to worry about how they're going to get through retirement. None of that crazy talk about having to eat cat food or any of that, okay? But many of us are not in our 20s anymore, or our 30s, or our 40s, or even our 50s. So we have a much shorter time horizon. And so we choose to trade intraday. See, the young man can just buy that index fund and set it up so that X amount of dollars are just automatically deducted from their checking account each week, each month, however you want to do it, and put into that fund. When it's up, you buy it. When it's down, you buy it. When it's up, when it's down, doesn't matter. Your dollar cost averaging over time. And you don't have to check, the numbers every day. You don't have to be glued to screens. You don't have to know how to read charts. It's just a very safe way to make sure you have retirement money. Because the indices will always go higher over time. Now again, we've been in the downtrend most of this year, which for someone who's investing in the way that I just talked, and investing and trading are two different things. But somebody who's dollar cost averaging, the fact that we've been in a downtrend most of this year, that's a blessing. Because they were able to buy more shares in that index fund at a lower price. Which, whether it takes a year or 2 years or 5 years for us to bounce back and start putting in new all-time highs, doesn't matter to them because they're young and they have that long-term horizon. So if you really want to do something special for your grandson graduating high school or college or whatever, don't give them a bunch of money at one time so they go out and blow it and act crazy like most of us did when we were young. Just have that $50 go into their index fund out of your checking account every month, if you're in a position to do that. And at some point there'll be, hey Grandpa, could I borrow against that account you got from me because I want to do this or that? No. Simple answer, no. You want to buy that car? You figure out another way. You want to buy that house? Save up for a down payment. Okay? And be relentless. Stick to your guns. When they're 60 and you're long gone, they'll be at your grave weeping. Thank you, Grandpa. Thank you for saying no. I thought you were mean and evil, but you really blessed me and my family. Because by then they'll have their own grandchildren. And hopefully they'll repeat the process. All right, EQ pays $20 a point. We gapped to here. Okay, call a little rally, and then this candle started to drop. It opened at 743 and dropped down to the target, 705. So about $750 per contract traded. Then it triggered. And from 705 it dropped to 657. So that's $900 per contract traded. Then just like on the other indices, you gotta wait for price to get back below blue and climbing before you can short it. Okay? And you get back above the trigger, but you got blue and climbing in the picture. You gotta wait for that red and falling to show up, and now, bang. From 705 down to 11,560. That's $900 per contract traded. Over here, over here. And lots of stuff you can do over here when you learn how to use your smaller time frame to execute your trades. But the 30-minute is your roadmap. If price is below this green line on your smaller time frame, you're only looking for short trades. On the 30-minute, if price is above the green line, the VBC, bull bear cross. You're just looking for long opportunities. Now, in an up move, they're going to be a retracement. Price always reverts to the mean. And the pullback holds more often than it doesn't. Of course, there'll be times when it doesn't hold. That's what keeps markets fluid and tradable. So, we're done with the indices, the man-made stuff, right? Actually, we still got the euro, but now we're going to go to crude oil. All the crude oil that there is in the belly of the earth, God put it there during the 7 days of creation. You don't know the story? Genesis, page 1, in the beginning, right? All the gold, all the silver, all the platinum and the palladium, and the uranium. God created it, and then he shut down production. And man has been trying to dig it out ever since, okay? So, like when the new contract for the S&P Emini comes out, you'll never hear anybody say, well, how many contracts did they issue for, the December? There's no such thing. There is an unlimited. Now, I don't want you to think that there's no such thing as supply and demand, because there is, but it's different. Because there's an unlimited amount of S&P 500 E-mini contracts. Now, when they harvest corn for the year, or wheat for the year, they can put a number on that, okay? This many bushels were created, or this much ore of whatever, gold, silver, whatever was taken out of the earth. They can bag and tag that. Now you have true supply and demand working. Now with things like crude, do politics get involved? Oh yeah. Are there other mitigating circumstances? Yeah. But there's an actual supply and demand issue with crude, because God only put so much in the belly of the earth. We think we know how much, but we're not positive. Same with gold, same with silver, same with all the other things I mentioned. Now, I said the S&P will always go higher over time, and the Dow and the Russell and the NQ. I stand on that. Crude, I can't say that, because it's based on supply and demand. If OPEC suddenly decides they're just going to produce oodles and oodles and oodles of barrels of oil, price is going to plummet. If they turn off their spigot, price is going to skyrocket. I think the highest I've ever seen crude was 140 a barrel. And just here in the last couple of years, what was it? We saw it down at 20 a barrel. And we're all still slamming our head in the wall going, why in the world didn't we buy as much crude as we could at $20 a barrel? Well, because we didn't. Okay, so just move on. No need to whine over it. Market opened last night. Came right down to the target, 75.80. Okay. First the target, and then the trigger. 75.80 down to a low at 73.60. Now, get ready for this. From 75.80 to 74.80. That's $1,000 per contract traded. And then down to 73.80. $2,000 per contract traded. Every time the price of crude moves $1, from 73 to 74, that's $1,000. From 74 to 75, that's $1,000. 75 to 76, a $1 move is worth $1,000 per contract traded. When gold moves $1, that's worth $100. But crude, $1,000. When silver moves $1, that's worth $5,000 per contract traded. Okay, so we triggered, put it a low down here at 73.60. Okay, that's more than a couple grand. And then we got back above the trigger and dropped again from 75.80 to the zone, which is 45/50. That little candle there is $300 per contract traded. Now price is climbing. We got almost to last week's zone. Didn't quite make it. Okay? But we've pulled back. And if this pullback holds, then we very well could trigger this afternoon the long side of crude. If we do trigger at 78.20, keep your eye on this bearish cross, this previous bearish cross, because that's the first spot price is most likely to find resistance if it triggers on the long side. Now, here we had a bullish cross. So if price were to start dropping and it got below the BBC, the first place you would expect support would be right here, right where the bullish cross happened. Resistance right where the bearish cross happened. Over and over, again and again. So when you learn these basic precepts and understand these underlying principles, that still doesn't make trading easy, but it sure makes it a lot simpler. Trading will never be easy, but it can be simple. Now that's trading. Investing, that can just be real simple. Like I said, put your money in that index fund, or your grandson's money, or whatever. Moving on. Gold. Oh, and we'll probably be rolling gold and silver tomorrow. I looked at the charts this morning. When volume in the new contract exceeds volume in the current contract, that's when we roll. Okay? So we will let you know in the discussion groups and in the room in the morning. And if I should choose to roll before I send out the CTAs tonight, I will notify you in the discussion group that I've already rolled gold and silver. Okay? All right, gold market opened here and dropped straight to the trigger, or straight to the CTA number at 1751. This candle opened at 55. Okay, but it was about a quarter after that I issued the numbers, so you probably wouldn't have gotten all of that. Now, price triggers the CTA, and it takes us down to the target, from the published entry to the published target, from 51 to 47, $400 per contract traded. Then we get back above the trigger, but we got blue and climbing right below. See how it walks price right up through this zone to this zone, which was issued a week ago today at 6:15 a.m. Eastern. Our members already have this week's zones. I'll be showing them to you tomorrow. Okay. And then price gets below the BBC and it triggers from 1751 down to 17, it's $130 per contract traded. And then from 51 to 47 again, right there. And now we've traded even lower, and we're approaching. Now, see this bullish cross right here? See this? This is the first time price has revisited this important price, important area since the bullish cross happened. When the blue line got above the green line, bullish cross. Okay? This is, we're now seeing for the first time price revisit this area. And for 2 candles, what has it found so far? Support. Doesn't mean price won't eventually make its way through it. It very well may. But if you were trading this thing short coming down, you'd be well advised to either take your profit or really tighten your stop right here. Because if gold is going to reverse, this would be the ideal place for it to do that. Okay. All right, silver. Here we go. Okay, the market opened last night, came down. It's kind of like gold. Remember, these numbers didn't come out till quarter after 6. This candle opened at 6. Okay. So we get below the BBC and we make it down to the target from 21.35 to 21.27. The zone is 26/27. That's 8 pennies. 2 pennies is $100. So that's $400 per contract traded. And then price gets, remember, blue and climbing, walked it right up, triggered the long CTA. Now once price is above the BBC and above that short CTA, could you have taken advantage of this on the long side? Sure. Or could you have waited? Yep. From 21.51, we made it up to 21.59. That's 8 pennies or $400 again per contract trade. Price dips back below the trigger. Off we go again. This time to 21.63. That's 12 points or 12 pennies, $600 per contract traded. Pull back to the BBC, the pullback holds, and yes, we trigger, and yes, it would have been profitable, but we would have been going against the grain by going long into what is typically resistance. Could you have traded this little spot up here once price overcame red and falling? You could. Or you could go look for something better, like this. Okay? You got red and falling, you're below the BBC. From 21.35, we go to the target at 26/27. It's another $400 per contract traded. But then price fell to the next zone. And now look what's happening. The step line is crossing from the left side of red and falling to the right side. So what's that tell us? That price is most likely going to attempt to pull back to the BBC. Price flows the same across all markets and all time frames. Here's the euro. Market opens, we come right down to the number. It's a target first. Never got penetrated, but certainly gave you an opportunity to get your goal for the day. Then price got above the BBC, took off, and once triggered, ran right to the target, goal for the day, and then some. Then back below the BBC, okay, the green line, back below. And now as it's heading for that short CTA number, had all this room to be short. But look what's happening right here. The step line is crossing and we're printing a green candle. So the euro may in fact be going to attempt to pull back to the BBC. Price always reverts to the mean, and the pullback holds more often than it doesn't. I just gave you the keys to the kingdom right there. Put them to good use. But we don't call it a secret. We don't try to make it look like a magic. Just the facts. Okay, this is bonds. We don't have a lot of bond traders, but we do have a few, so we try to take care of everybody. The CTA long number was 127.28. This is where the market opened. And from 127.28, we ran right up to the target at 128.07/08. And it kept going. Then price got below the BBC. And we came down to the zone, bounced back to the BBC, came down to the zone, bounced back to the BBC, came down to the zone, consolidated. See, these were rejections, okay? And then consolidation. Now we've triggered the short side from 127.16 down to 127.09. Makes it a wonderful day to be a bond trader. Okay. And that brings us around the world back to our daily chart, where prices are what? Still on the low of the session and getting lower. To become a part of CFRN, to have everything a trader needs, all under one roof at one low price. All you got to do is go right here, eminifuturestrading.com. This page is pretty self-explanatory, but if you need help, feel free to call Valerie at 949-42-EMINI. She'll be back this afternoon. Or send an email to support@cfrn.net. Now the passport's for life. Pay once, membership for life. No recurring fees, no upsells, no new shiny objects to buy, no nonsense. 9 out of 10 new traders will fail simply because they don't have a teacher. They got books, they got YouTube videos, nothing wrong with those, but they're not a substitute for a living, breathing teacher putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. You see, what you learn in the live training room is 100% rules-based trading. What you just saw me go through with the CTAs and the logic, okay? That's discretionary trading. But it's built on the framework of the rules in the live training room. So you need to learn the rules as they're taught in the live training room first before you start putting real money to work as a discretionary trader. Now, every passport holder gets a PDF. It's called 2420 Blueprint. As I said earlier, it's designed to help you to go from 1 to 20 contracts over a period of 24 months. Now, we give you what 9 out of 10 traders don't have, and that's a teacher every day. But the blueprint also helps you write a business plan and a trading plan. 2 very important documents and 2 very different documents. 9 out of 10 new traders don't have a business plan and they don't have a trading plan. So we're not just trying to teach you how to trade. We also are trying to teach you how to manage your trading business. The more you treat it like a business, the more it will behave like a business. If you treat it like a weekend in Vegas, well, that's the results you're going to get. We all know what you win in Vegas stays in Vegas, right? That's right. So, along with having access to the room every day for life, you will also have access to unlimited one-on-one private mentoring. The methodology and strategy that we teach you and the indicators that you'll learn for life are fluid across all markets, all time frames. Not just futures, but stocks, crypto, forex. You'll receive the Logic 247 alerts around the clock. You'll receive the concierge trade alerts every trading day. You'll have access to the Thursday night members only workshop. All that and much more. The Passport is your all access pass to everything we do, everything we've ever done, and whatever we do in the future. And whatever we do in the future won't cost you a dime if you have a passport. Now, I put this in a discussion group, I think on Friday. People are going to be asking you, okay, in the coming days and weeks, what do you want for Christmas? Passport. I want a passport. It's the gift that keeps on giving. Now, it's probably going to have to be a spouse or your rich uncle, because we charge a whopping $5,000 for the passport. There's people in this audience today who've lost more than that today than what it costs for a lifetime membership. If $5,000's too rich for your blood, okay, I understand. Sit down and count up how much money you've lost over the years, how much junk you've bought trying to learn how to trade. Once you do that math, $5,000 probably won't seem like quite as much. But hey, what we do may not be for you. That's why we give you 5 consecutive trading days. You can start on a Monday, a Wednesday, it doesn't matter. 5 consecutive days with access to every single resource. The indicators, the strategy, the one-on-one mentoring, everything. No credit card required. Why would we give away so much and ask nothing in return? Because we want you to be able to make a well-informed, intelligent decision if this is right for you. We don't know any way to be any more fair than that. And via our Telegram channels, of which there are many, you'll have access to our other traders. You can ask questions, they share charts. Sometimes they provide commentary with their charts, sometimes they don't. Sometimes the chart just speaks for itself. Okay? Imagine if you went to the museum and you were looking at the Mona Lisa. Now, the artist who painted that picture that we're all familiar with, would you expect him to be standing there telling you, well, I used crayon here and chalk here and pastel here and I used a number 9 brush right here, and then to get this particular look I switched to this number brush? You know, art's art, and I see chart as art. I encourage our members to provide explanation with their charts if they want to. But if they don't, they don't have to. Obviously, they're sharing something that means something to them. And so, if somebody posts a chart with no explanation, you can always politely ask, hey, Mr. Joe Blow, that chart you just posted, what exactly does that mean to you? Because I'm trying to learn how to read these charts myself. Because we have such a great group of traders, I'm pretty sure 9 times out of 10, they'll give you their best explanation they can. Maybe brief, but everybody gets along. So many of the trading communities out there, the chat rooms and the forums and the message boards, man, everybody's competing against each other, stabbing each other in the back. We don't tolerate that nonsense at all, period. That's why our discussion groups are family friendly, okay? We encourage one another. We help one another. We applaud one another. And when you need help, you ask politely, and you'll get it. Let's wrap up this fine day with our good word for the day. Now, Friday we talked about help for your marriage. So kind of in that same vein, we're going to continue with communicating with your mate. Now, this doesn't matter if you're a newlywed or you've been married 40 years or more. Without good communication between both parties, that dog's not going to hunt. Or if he does, he's going to be one miserable puppy. Philippians 1:9. I pray that your love will keep on growing and you will fully know and understand. Now, some of us may have to reach back into our memory banks to remember this, but remember when we were dating somebody, we could talk effortlessly for hours. But once you've been married a while, unless you work at it, conversation can become superficial and even lead to disagreements. The Bible says in James 1:19, be willing to listen and slow to speak. There is an art to communicating. Number 1, look for opportunities to compliment one another. You may think your partner's wonderful, but they need to hear you say it frequently. It takes 12 compliments to neutralize the effect of one criticism. So when life beats your mate down, build them up. Number 2, don't try to change them by nagging. Questions like, why can't you? Or the infamous, why do you always? Can sound more like parenting than partnering. Tell your partner once, not 1,000 times, what's bothering you. And before you speak, ask yourself, would I say this to a valued friend? If not, don't say it. Number 3, a marriage can only stand so much soul bearing. As a rule, shorter is better. Honey, can we talk for a few minutes? Is less threatening than the ominous, we need to talk announcement. People can only stand so much soul bearing. Pressuring them just gets the wrong result. If your spouse is unresponsive on an issue, discuss it with a trusted friend or counselor. Then give your spouse the condensed, less emotional version. And number 4, let your mate lead. When your spouse is talking about things you're not particularly interested in, remember the scripture. Submit to one another. Ephesians 5:21. Sometimes that means asking, what would you like to talk about? If you want a good marriage, use these 4 principles every single day. And yes, that includes weekends and holidays, especially. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.